Welcome back to Explain the Charts, your go-to channel for in-depth market analysis. Today, August 6th, 2025, we're putting Alphabet Class A, ticker Google, under the microscope. The tech giant has been grappling with significant news recently, presenting a mixed bag for investors. Let's start by looking at the broader picture on the daily chart. Currently, Google closed yesterday, August 5th, at 194.67, with today's candle still forming or just closed at that same price as of our current UTC time. Recent news indicates a legal setback, with Google losing its appeal in the Epic Games lawsuit, requiring a revamp of its App Store. This ruling carries significant financial implications, potentially impacting future revenue streams. However, on a more positive note, Google's Gemini AI unit has secured integration with the U.S. General Services Administration, signaling potential lucrative government contracts and market validation. Competition in AI is also heating up, with new open-weight models from Microsoft-backed OpenAI entering the fray, challenging Google's dominance. These contrasting events are clearly reflected in the stock's price action over the past few months. If we zoom into a critical period from April to June 2025, you'll see a dramatic drop. Observe the candle on May 7, 2025, where Google plunged from an open of 164.08 to close at 151.38, losing over 7.7% with massive volume. This sharp decline correlates strongly with the negative sentiment surrounding the Epic Games lawsuit ruling, as investors reacted to the potential financial impact. However, notice the resilience shown immediately after. The stock found strong support around the 140 to 145 level, marked by the lows on April 7th and the bounce on April 9th. This level acted as a critical long-term support zone, preventing a deeper capitulation. Switching back to the full daily chart, we can see Google subsequently staged an impressive recovery from these lows. It gradually climbed back, breaking through several resistance levels on its way up. The stock experienced strong upward momentum, particularly evident in late June and early July, demonstrating underlying bullish sentiment despite the legal headwinds. The levels around 170 to 172, which previously acted as resistance or consolidation points, were successfully breached and could now serve as new support. Currently, Google is trading near the 194 to 195 range, having recently touched highs around 197.86 on August 5th. Let's move to the 1-hour chart to analyze the recent short-term price action and identify immediate support and resistance. Focus on the period from July 23rd to July 24th. Here, we see Google peaking near 197.95 on July 24th before a significant intraday pullback. This suggests strong selling pressure at the 197 to 198 resistance zone. The subsequent price action shows consolidation around the 192 to 193 area, indicating this might be a short-term support level. The high volume on July 24th during the drop confirms significant market activity around that key resistance. Now, let's drill down even further into the 15-minute chart to capture the very latest price movements, specifically from August 4th through August 5th. We observe a steady climb from around 190 at the start of August 4th, reaching highs near 194.50 before a slight consolidation. Then, on August 5th, another strong leg up pushed the price to its recent high of 197.8599 before pulling back to the 194 to 195 range. This recent volatility highlights active trading and a battle between buyers and sellers. Immediate resistance on this timeframe appears to be at 195.50 to 196, while support can be found around 194, and then 192.5 to 193. From a bullish perspective, GOOGL's strong recovery from the May 2025 lows, coupled with positive developments in its AI sector like the GSA contracts, paints an optimistic long-term picture. The company's core business remains robust, and AI innovation continues to drive growth. A sustained break above the 198 level would signal renewed bullish momentum, targeting the psychological 200 mark and potentially revisiting the 206 to 207 all-time high observed earlier this year. This scenario becomes more likely if market sentiment shifts positively towards tech or if Google announces further advancements in AI. Conversely, bearish arguments center on the unresolved implications of the Epic Games lawsuit and the intensifying competition in AI. The recent rejections from the 197 to 198 zone suggest strong overhead supply. A breakdown below immediate support at 193.5 could quickly see Google retest 190, then 185 to 186. If these levels fail, a more substantial retracement towards the 170 to 172 range, or even the 150 to 155 strong support from the May crash, becomes a real possibility. This bearish outlook would be reinforced by any further negative legal news or signs of declining ad revenue. To recap, key price levels to watch for Google are the immediate support at 193.5 and resistance at 195.5 to 196. In the short term, a push above 198.00 could open the door to 200 to 202, moderate likelihood if AI news remains strong. A break below 193.00 could see a retest of 190 and then 185 to 186, moderate likelihood if market pulls back or lawsuit concerns resurface. For the long term, strong support holds at 170 to 172 and, critically, at 150 to 155, which needs to hold for the overall uptrend to continue. On the upside, 206 to 207 remains the key resistance for a new all-time high, lower likelihood in the short term, but possible with significant positive catalyst. Traders should also monitor trading volume. Significant spikes on breakouts or breakdowns provide stronger confirmation. Pay close attention to upcoming earnings reports and any new announcements regarding AI development or the App Store strategy, as these will heavily influence future price action. Always combine fundamental analysis with what the charts are telling you. Thanks for tuning in to Explain the Charts. Don't forget to like, share, and subscribe for more in-depth market insights.